Capital with the week in review for the week ending March 20th of 2020. The markets suffered their worst week since 2008 as the economy slowly shut down due to the coronavirus. The Dow Jones Industrial Average fell 17.3%, while the S&P 500 dropped 15%. The Nasdaq Composite declined 12.6%, and the Russell 2000 continued to lag, declining 16.2% during the week. No sector was spared in the week's carnage, with all 11 sectors in the S&P 500 losing at least 11%, including a 23% plunge in real estate. Confidence was lacking among investors despite additional monetary stimulus efforts taken by central banks. On Sunday evening, the Fed put through aggressive actions to support the markets, including cutting the Fed's funds interest rate to a 0 to 0.25% range, announcing a $700 billion worth of quantitative easing, which included buying both treasuries and agency bonds. Third, increasing the daily repo operations. And fourth, established facilities for commercial paper and money market fund liquidity. Lastly, the Fed coordinated with other central banks to enhance the liquidity in U.S. dollar swap lines. Despite the host of stimulus measures taken by central banks, investors waited on a fiscal response. At week's end, a $1 trillion plus fiscal stimulus package, which is thought to include directing payments to individuals and businesses, continued to be deliberated within Congress. Oil prices remained highly volatile, falling 24% on one day and rising 23% the next. President Trump said he would get involved in the price war between Russia and Saudi Arabia. For the week, however, crude oil fell 24.7%. Safe assets also felt selling pressure on the week. In particular, gold declined 2.1%. Alternatively, the dollar surged 4.1% during the week. Lastly, in fixed income markets, two-year Treasury yields declined 14 basis points as their prices rose, while the 10-year Treasury yield ended roughly flat after experiencing a quite volatile week. Looking at markets will be attentive to fiscal stimulus measures. As you navigate the markets ahead, we encourage you to turn to Telemus.com or your Telemus advisor for commentary and perspective. Thanks, and enjoy your week.